Hi, everyone. My name is Allison Marconi. I will be your panelist today, going over all of the information for insuring your business. We will get started promptly at 12, and so we'll just wait for everyone else to attend now. Thank you. Hello, everyone. Thank you again for joining today. We're just going to wait one more minute for people to join in, and then we'll get started. I just wanted to, a little bit of housekeeping. If you could please utilize the webinar chat for any questions you might have during the presentation. We will have segmented breaks where we will answer any questions you might have. Please do use the chat. Thank you. All right, it's 12:01, so I'm going to go ahead and get started. My name is Allison Marconi. I am a commercial insurance broker. I've been in the industry now for about 15 years. I specialize in insuring small businesses with less than 250 employees. I work in all sorts of industries, manufacturing, distribution, office risks. I've seen it all, but I'm here to kind of bestow a little bit of the knowledge I've acquired over the last 15 years and help adequately protect your business and give you some insight on what policies could best work with your business type. We're going to get started here by talking a little bit about SCORE. If you can see my screen here, I personally have benefited from SCORE. They have educated over 17,000 attendees. There are many different options for programs available. They are a nonprofit resource. And if you have not utilized their programs yet, they have many different topics they go over for every single job type. You can also book a free session with a mentor. There's no charge for this mentoring. You can meet in person or via Zoom. There's also hundreds of different webinars and in-person educational events. I personally have utilized a lot of these in-person events. I've also attended their Women in Business forum, which happens once a year. It's really educational. I just love SCORE. I have great things. I have great things to say, and I'm really happy to give back to the community as well. So I'm going to move over to the presentation. Just one second. Can everyone see this okay? All right. Well, again, thank you for joining us today. I hope you learn a few tips or tricks on how to best protect your business. Whether you've been in business for decades or you're just getting started, the following slides are going to give you an idea of everything that your business needs to ensure that when the worst case scenario does happen, that your business will be protected. We're going to be going over a lot of content today, so this is going to be a high-level overview. Like I said earlier today, please utilize the webinar chat to send any questions you might have. I will be taking designated breaks between segments where we will answer all of your questions. So we'll get started. We're also going to be going over introductions. We'll get started with ensuring your most important asset, your people, and then moving into ensuring your business and covering the different types of policies for your commercial insurance. So my name is Allison Marconi. Like I said, I've been in insurance since 2008. I do specialize in small to medium-sized businesses. I have two beautiful daughters and two golden doodle dogs, and I live in Newport Beach. I'm always, if I'm not working, I'm at the beach or doing yoga. We also have our retirement specialist on the line today, RJ Carver. He works with Icon Savings Plan. He's going to be going over some of the new laws pertaining to retirement requirements for small business owners like yourselves. Thank you, RJ. So we're going to get started today with our group medical portion. You might have heard of the Affordable Care Act, which has been called the ACA or Obamacare. This program was implemented during President Obama's tenure. So you might be wondering, are you an applicable large employer? Does this law actually apply to you? And this will mandate large employers to offer health insurance through their business. So are you a large employer? In the eyes of the ACA, you are if you have more than 50 full-time employees working at least 30 hours per week, or part-time equivalents when you add together all their part-time hours. There is a calculation behind this. You would just average out the hours divided by week, or average 130 hours divided by the month. If you need help figuring out if you're a large employer or not, you can always email me after, and I'm happy to go over that with you. Even if you're not required to offer health insurance through your business, I'm going to go over the next couple of slides as to why it might be something you might consider doing. It is the number one benefit that employees are looking for when they're seeking new employment. So it only will behoove your business to offer something that's going to make your place of business more attractive to work at. So I'm going to pull up a minimum participation by carrier slide. Just one moment. This is a list of all of the different carriers that are available, and I'm happy to send this out if you have any questions. So you can see here, if you are an owner-only group, if you are a one-man band, there are not very many carriers that you will not be able to get group medical if you do not have a W-2 employee or a partner. If you have a business partner and there's just two of you working at your place of business, then Anthem Blue Cross will take groups with just two owners who have a 50-50 split, and so will United Healthcare. So there are options available even if you are a small business, small meaning number of employees. Financially speaking, if you're going to be offering group medical through your business, the employer must contribute a minimum of 50% of the monthly premium. So for example, if you do have a total spend for each employee, it's going to be $300, then for that employee, the employer must cover at least $150. You can also offer a fixed flat amount, but this still must meet the minimum 50% for each employee. So I always advise to at least do a percentage rather than a flat dollar amount per employee. You as a business owner, you are not required to cover the employee's dependents. Dependents would be spouses, children, or stepchildren. This does not include boyfriends, grandparents, cousins, etc. And this dependent cost is optional. Now, if you have a group medical plan already, you're probably familiar with this, but I just wanted to quickly go over. There's different medical plan types. So an HMO plan, it's called a health maintenance organization, offers a network of healthcare providers that you can use for your medical care. These providers have agreed to be in the plan, and they give plan members a certain rate for their services. The care will always start, this is one of the differentiating factors between the other types, care will always start with your primary care physician, your doctor that you go to for your checkup or your annual. That is going to differ from a PPO plan. PPO plans tend to be a little bit more expensive, a little bit smaller of a network. But if you are going to self-refer to a specialist, if you know you need to go see a dermatologist, you can just find a dermatologist in network and schedule an appointment with them. You don't need to let your primary care physician know that you want to see a dermatologist first. There is out-of-network coverage for medical emergencies only. Like we went over earlier, referrals needed for a specialist, yes, but for a PPO, no, you do not. The HMO is going to be less expensive than a PPO. And then the network is going to be a little bit more narrow with an HMO plan versus a PPO. We'll have typically more carriers contract with PPO. An EPO is not as common, but I wanted to go over it. It's an exclusive provider organization. There are no out-of-network benefits except for in the event of an emergency. And this is what I recommend for groups that are a little bit more tech savvy. This is for budget-friendly members. Because an EPO is going to be a little bit less expensive than a PPO plan, but definitely richer than an HMO. So here, again, this might be, if you have health insurance already, you probably know this information, but there's a different metallic plan types. And you might be asking yourself, what's best for you and what's best for your group? I'd say this largely depends on your budget. At the bottom of the healthcare spectrum, we have bronze. It's going to have the lowest monthly cost, but has the highest cost to actually utilize the health insurance. So these typically have a very high deductible. $6,500 to $8,000 is typically what we see. And I recommend coupling these always with an HSA plan, which is a health savings account we'll go over shortly. You have to find plans that are HSA compatible to go with your bronze level. Also, there's some silver plans that act that way. These silver plans are going to be a little bit more expensive than bronze. The copays are going to be lower. Deductibles are usually between $2,000 to $4,000. And as you go up the totem pole, they're going to be more expensive monthly, but less expensive once you actually go to use the care. For a gold plan, you're going to see $0 to $2,000 range here. Copays typically around $35 to $50 for a primary, anywhere from $65 to $100 for a specialist. And platinum is, again, the most expensive monthly cost, but the lowest barrier to entry. So you're going to spend the least out of pocket when you actually go to the doctor. Usually these plans have little to no deductible. And when you offer a group medical plan through your business, you can pick a couple of these. Sometimes they have to be touching tiers. So you could do bronze and silver, but you wouldn't necessarily be able to do bronze and platinum. So they have to be touching tiers side by side. These are the different types of health savings accounts. So I'm going to start with the HSA, which is probably the most common. These allow you to take money out of your paycheck for pre-tax and put them aside for qualified medical expenses. Like I said, you do have to have a HSA qualified medical plan. So like I said, typically bronze. It is owned by the employee. So if you set up an HSA plan through your business and then they were to leave and go to a different place of employment, they could take that HSA plan, let's say through Optum Health, and then move it to the next place. That is like a savings plan that they set up that will never go away for them. So it is portable. It can be contributed by the employee, the employer, or a family member in certain circumstances. Do the funds expire? They never expire. And then the limits for 2023 were just increased. You can put away $3,850 per year per individual, $7,750 for a family. An FSA account is a flexible spending account. It allows employees to pay for out-of-pocket medical expenses with tax-free dollars, just like an HSA. Allowed expenses include copays, deductibles, qualified prescription drugs, insulin, medical devices. You can pair these with any sort of medical plan. It is only it's owned by the employer, and it is not portable. So if you have an employee who leaves, then they are not going to be able to transfer this with them when they go. The funds would be either redispersed into the account to help pay for plan expenses, or you could just save it for the next year when you're doing your dividends to the employees. Who contributes? The employer or the employee. And then the funds do expire. If any money is left over at the end of the year, the employer can set up as either two options, but not both. You either have 2.5 more months to spend that extra cash, or you can carry over up to $500 to spend into the next plan year. So we always encourage employees when we do enrollment meetings to use the funds. The most you can put away in a calendar year for an individual is $3,050. And then we have an HRA. This is a health reimbursement account or arrangement. It is employer owned, employer funded. Eligible expenses, just like an HSA, include deductibles, coinsurance, copays. The employer owns this. It is not portable. The employer is the only one who contributes to this type of a plan. The funds usually expire, but that is again set up into the rules that you, the employer, create, and it's going to have a lower contribution limit, so 1,950. So if you're going to go forward and get a quote for your business, these are the items that you're going to need. You're going to need to contact a local agent or broker. You'll need to provide basic business information, where you're located, your address, the industry type, and then you'll need to supply them with an employee census for every single employee, even if you don't think they're going to take the medical insurance, and their dependents, if you're going to be offering any coverage for dependents. If you need a census template, please don't hesitate to email it to me. I'm happy to send it over. If you're going to decide to go move forward with the medical plan, you really need to determine what can you actually afford. Any premiums that you're going to be spending on medical insurance for your group is going to be a tax write-off, so it will lower your overall taxable income. You're going to figure out what kind of plans do you want. Are you on HMO and PPO? Are you really going to look for more budget-friendly silver bronze options? Or are you going to do a mix of the different types? What are your contributions going to be for your employees? For your actual employee, it has to be, again, a minimum of 50%, but you can cover up to 100% for each employee. And then what are you going to contribute for dependents, if anything? Typically, I don't see coverage for dependents, but it depends on the group and the business's budget. The different types of, in addition to group medical, which you can write off, there are many other different types of benefits that you can offer for your business, including dental, vision, group life insurance. I always recommend adding on a group life insurance policy because it's very inexpensive. I have had circumstances where an employee had passed away at a business, and then the group did not have a group life insurance plan set up, and the employee's family comes to the business owner and asks for help with burial expenses. So this is a nice way. There's no taxes taken out of it, that you can supply your employees' families, people that might not necessarily have an individual life insurance policy of their own, with some sort of fund if the worst case scenario does happen to that individual. We can also have disability policies on a group platform. You can do short-term disability or long-term disability. The difference between the two is that California does offer short-term disability. It is covered through your employer payroll taxes. These cover short-term disability payments for up to 52 weeks for most employees if they're unable to work that long. And if you are self-employed, you can receive benefits for only 39 weeks, and as long as you're paying into the state disability system. This will get you typically to about 60 to 70% of take-home pay. Long-term disability is not covered by the state of California. States for Social Security disability, these are notoriously pretty hard to qualify for. So I always recommend trying to have a separate policy through your business if it's in your budget. This covers wage replacement. It does not cover your medical fees. And this can last for indefinitely for the life of the person while they're out and disabled, if they become permanently disabled. We can also offer chiropractic, acupuncture, voluntary benefits. Voluntary benefits would include some, you've probably heard of Aflac. They have the duck in their commercials. We also have Colonial, Unum, Allstate benefits. There's a bunch of different voluntary benefits. And what I like about these is that they are 100%, or they can be 100% covered by the employee. So you can add this on to your benefit package and make it appear richer and much larger and more enticing to employees without really having to cover any of the costs for it. You can do accident coverage, financial planning, ancillary benefits being dental, vision, disability. There are also cancer programs as well. Critical illness would cover the event of a heart attack, kidney failure, stroke, hospital indemnity plans. These help kind of cover co-pays and deductibles. There's a bunch of different options available that are very inexpensive, or these could actually not cost the business anything. So any questions so far? Sorry, I saw Michael had a question. EE stands for employee. And if you see ER, that stands for employer. Okay, we're going to keep moving on. So retirement through your business, I'm going to let RJ take over here. So take it away.
Hey, yeah, absolutely. Thank you, Allison. So just here to give you guys a little bit more info about the California state retirement mandate, something that some of you might be familiar with because around this time last year, the state sent around a lot of sort of doom and gloom literature talking about what would happen to you if you didn't offer one of these plans. So I'll just give you the whole rundown of, what the mandate is, whether or not it applies to you, and what your options are to comply. It's actually not that difficult to get around as long as you know what to do and where to look. So basically, as of this, the most recent update is as of this last June, if you have more than 5 employees in the state of California, and the distinction is 5 W-2 workers, it's not hours worked, contractors do not count. You're going to be required to offer some sort of a state compliant retirement plan. The penalties, if you do not comply, are again, it's $300, the first per uncovered employee, if you're found to be 60 days out of compliant, and it's another $500. So it's $800 per uncovered employee now, because most folks would be quite some time out of compliance. And so again, the state has sort of faltered with how they're going to impose these penalties, but they have just released literature saying that they're doubling down on the mandate. So I wouldn't expect them to be, going away in this sense. But basically your options here, and again, you're just required to offer some sort of a state compliant plan. And so what they're trying to do with folks is, first off, they want you to join the state plan. Now, the state plan isn't anything that's necessarily bad. The state plan is just a little bit cumbersome because it's not a technology company. And something that's important to note about the state plan, if that is the option that you choose, is that while it is free to the employer, they do charge an assets under management fee of about 1% to each employee that contributes. And they also automatically enroll folks. So if you set up CalSavers and your employees are enrolled, they need to go to the website to opt out. Make sure you let them know they have to do that, or the state will take their money and allocate it in a place they might not want them to. They will get upset. If you don't go with the state plan, your other options are just going to be probably the typical retirement plans that you've heard of in the past. And if you have any questions about any one of these, whether or not you might be interested in the type of plan that my team provides or any of these other ones, we have a number of partners that I can send you to. I can point you in the right direction. First is going to be your typical defined contribution plan. So it's your 401k, your 403b. And then there's a few forms of SEP. So there's your SEP IRA, there's your simple IRA, and then there's a payroll deduct IRA with automatic enrollment. This is something that you can set up through your payroll provider. That is something that CalSavers is offering. It's called a Roth IRA. I know I'm throwing a lot of info out, so please come to me with questions if you have questions about it. Or if you're interested in potentially a technology provider, please come talk to me. This is what my company, Icon Savings, also does. And if you have one of these already in place, no worries at all. It takes about 2 minutes to file for an exemption. Again, just contact Allison or contact me. I can walk you through the process. It's a matter of going onto their website, checking a few boxes and hitting submit. So that's it for me. Please, any questions about retirement, the mandate, etc. I'm here and would love to answer. So thank you, Allison.
Thank you, RJ. Any questions in regards to retirement through the state?
It looks like Jasper has a question about Oregon. Oregon does have a retirement mandate. They have not imposed penalties just yet, so they're a little bit further down for what they're doing. We are an exemption in Oregon, but you also do not, as of right now, you're not going to have to take any action if you are in Oregon just yet.
I see a couple other questions here in regards to mechanic shops. I'm not going to get into specific industries during this presentation. I'm going to be going over different types of policies for commercial insurance for everyone. And if you want to email me afterwards, I'd be happy to go over the specifics. I was told by the underwriter, I'm going to answer this business personal property question when we get to the commercial insurance segment. And then I see my family child care business is applying for a small business loan. Is that his home base? There is one question here, RJ. So in California, as of now, if a company has more than 5 employees, then they need to offer some sort of retirement plan. Is that correct?
That is correct. Yes, so it's 5 W-2 employees. So if you have 5 W-2s on your payroll, then you are going to be subject to the mandate. That is the current limit. And then it looks like payroll providers, ADP, et cetera, are they the only ones who offer retirement? Okay, yes. So no, they're not. There are a ton of different retirement providers out there, including actually the company that I work for. Most retirement providers are going to integrate with your payroll system. And so whether that's ADP is going to have that full suite of products, but if you'd like to look at a cheaper alternative, ADP tends to not really focus on small businesses. And so I would encourage that if you're considering ADP to go check something else out. If the company does not, who would you report? You would report it to CalSavers. And CalSavers is the one who enforces it. And so if they don't offer retirement, again, the employer is going to be fined $800 per uncovered employee. Thank you. Can you offer insurance to your freelancers? Well, you can offer retirement to your freelancers, but that's a separate conversation.
You can offer group medical and benefits to your freelancers if you so choose. So moving on, this is going to be a little bit more about how to shop your renewal and make it work to your advantage. So we are going to, every year prior to your benefits package renewal, we are going to see a notice coming out about 2 months in advance, 2 to 3 months in advance. It's best that you with your broker agent sit down and analyze what kind of rate increase are we getting. Ask your broker agent to shop the market for you to see if another carrier has become more competitive. There is no loyalty discount for staying with the same carrier every year. They don't take that into consideration when it comes time for claims. So do your due diligence and shop. Put your broker to work, ask to see the prices, ask to see the quotes that come back. In that regard, though, don't play the field when it comes to your broker agent. Everything is going to be based on your tax ID number. Let's say you submit a quote to Hartford, you give them your 9-digit tax ID. They're going to release the pricing. It's not going to be a different price if you go with a different broker. So utilize just one individual for your quoting. And then you're going to have to do a little bit of time on your end as an owner. You're going to need to update your census. If you do decide to switch carriers, you will need all new applications from employers, employees. You'll also need waivers for people that are going to waive the coverage. You'll need to pull a payroll summary report, which is called the DE9C. So why, you might be asking yourself, sounds like a lot of work, and it's not a small amount of work, but why are we going to spend all this time, money, and effort on employee benefits? And that's a good question. And the main reason why you want to do this is because you, the business owner, are going to save some major coin on your taxes. For you, Mr. or Mrs. Business owner, any expenses that you incur related to group health insurance for employees or their dependents are 100% tax deductible as ordinary business expense. This is also going to help you save money on all of your other taxes, payroll taxes, FUTA, FICA, unemployment tax, also your workers' comp. So I really do advise everyone that has their own business to get their group medical through their business. It's going to be a better plan overall, and you're going to save so much money on taxes. It's also going to be a major tax savings for your employees. So they can pay for their premiums with pre-tax dollars, which lowers their overall taxable income. So for example, here we have employee Ben. His weekly salary is $1,000. His health insurance per week is $100. So he can now, through your group medical plan, pay for his insurance costs through the business, and then he's only taxed on $900 versus $1,000. So this on average saves your employee anywhere from 30 to 45% on their health insurance premiums when they buy through the employer versus through an individual platform. Plus, you'll also get savings on state disability and your personal income tax for the employee. Other reasons to offer benefits, like I've said, touched on earlier, Your top employees, we all know how hard it is to hire good quality employees these days. The best way to attract top talent is going to have a competitive and rich benefit package. Um, Having health insurance through your business means you have, on average, a healthier workforce. You see less sick days, you're less likely to have a workers' comp claim, and your employees are more engaged at work. As far as employee retention goes, benefits are viewed as more important than a pay increase in some circumstances. Um, there are going to be richer benefits in a group platform than on the individual market. And it's a fact. I recently had a business owner who came to me and he was offering a stipend to all of his employees, gave them a flat $500 to go out and buy group medical on their own. So what we did is we did a like for like Anthem side by side policy. And we found that for given the exact same type of plan, the premiums were relatively about the same, but the copays were less, the deductibles were lower, the pool was a little larger than what they had on the individual plan. So overall, you'll see there's going to be richer benefits always through the group platform. And then we get nice, warm, fuzzy feelings, paternalistic feelings towards the employees. You're taking care of them, and the employees take notice and they appreciate it. So you can see here where they talk about benefits being more important than a pay increase. It's usually 82% for women would prefer higher benefit package, 80% overall for employees, 76% for men with children would prefer benefits over a salary increase, and then job candidates, again, looking at benefits and perks as a top factor for determining their employment status. So in order to utilize the pre-tax savings to pay for the medical premiums with pre-tax dollars, you'll need a Section 125 plan. This can be called a premium only plan or a POP plan or a cafeteria plan. They are all the same section of IRS code that allows employees to pay for qualified medical, dental, or dependent-based expenses on a pre-tax basis. This, again, overall is taxable and lowers your taxable income. You can also use this for group term life insurance and then also for HSA plans. I highly recommend to utilize a TPA to help manage this. A TPA is a third-party administrator who is going to be an independent agent or organization that's going to help with claim adjudication, record keeping, sending out COBRA notices. It's on average going to be about $2 to $5 per employee per month, but some brokers will offer this service to you for free. So ask for it. You have any questions in regards to medical or shopping? So I see a question here. What are the options for a one-person business S Corp? If you are a one-man band, there are no group medical plans that will offer you. You would have to get your medical insurance through the individual marketplace. When you say 5 W-2s, I think this is RJ. This is in regards to W-2s. Is it part-time or full-time?
It is just W-2 workers. It does not, there's no amount of hours worked specified. So if you have more than 5 W-2s, it is worth it. And it seems more expensive than it actually is to offer a retirement plan in this segment. So trust me, just compared to what the penalties are versus what you would actually pay to just offer a compliant plan, it's pretty nominal.
There's a question that just came up. Is the cheapest usually not worth it? Depends on if you're using the insurance or not. You might be a young individual who never goes to the doctor, then maybe a bronze plan is going to be best for you. But if you're older and use the coverage, then it might be cost prohibitive to have a cheaper plan. There will be full audio video replay and the slides. This is being recorded. And we'll get moving into Medicare. Unfortunately, our Medicare expert was unable to attend, so I'm going to quickly go through Medicare. But basically, the gist of these plans is if you have elderly employees, we recommend that you would roll them into a Medicare plan versus having them on your group medical plan, because If you are an employer with fewer than 20 employees, Medicare is going to be the primary insurance and the employer-sponsored coverage will be secondary. The member must enroll in Medicare. And if you have more than 20 employees, the employer-sponsored coverage is primary and the Medicare is secondary. And the individual, the elder employee, has a choice whether or not they want to enroll in Medicare or not while he or she is still employed. Why is Medicare good for business? Because the older you get, the more expensive your medical premiums are going to be. So we see for employees who are over 65, you'll see even with a silver plan, you're going to be looking at over $1,000 a month for employer costs. So this might be a considerable cost savings for you to encourage employees to use Medicare. It's advantageous for the employee. There are low or zero deductible plans and low out-of-pockets. And you'll see for Part B, you're looking at about $170 a month. And then they can also be removed from the employer-sponsor health plan. So it lowers your cost. So one thing to consider is that not all insurance brokers offer Medicare or are licensed to offer Medicare. So make sure you find someone who is compliant and does understand all the nuances that go into Medicare insurance and their products. So now we're going to get moving into the commercial insurance segment. Any questions on Medicare? I won't be able to answer these live, but I will be able to email you back. So let me know if you have anything so far. Okay. Safety in the workplace. We're going to talk about workers' comp. So offering a safe workplace is not only good for business, it's going to help reduce some of your costs as well. So having a safe business protects obviously your workers from injury or illness, lowers the cost of you having to send them to an urgent care, the emergency room in the event that they hurt themselves. It's going to greatly reduce your workers' comp premium overall. It increases productivity and quality of work, reduces absenteeism and turnover, and raises employee morale. No one wants to go to work where they're worried that they're going to get injured or get hurt or die. That's just not good for employee morale. So if you have employees working for you in the state of California, you are required to have a workers' comp policy. It is the law in the state of California, with the exception if you're a government entity. Workers can't sue their employers in court through the state system. And in return, employees don't have to prove that their employee was at fault for the injury, just that it was work related. So there are some exceptions for workers' comp, whether you need it or not. If you are a one-man band, the only employee at your business, you do not need workers' comp on yourself because you are not going to turn around and sue yourself in the event of an injury. If you have 1099 employees, you do not need to include them on your workers' comp policy through your business. They would need to have it on themselves and their employees. And then also, if you are an employer with more than 10% ownership in the business, you do not need to be included in your workers' comp plan because, again, you are not going to turn around and sue your own business if you are injured. If you are, how to determine 1099 status, and what we typically recommend is the ABC test. So is the worker free from control and direction in the performance of services? Are they performing work outside? Is the worker performing work outside the usual course of business for the hiring company? Meaning, is your business baking cakes and cupcakes? You're a bakery and you hire someone to come in and do some gardening for you. That's normal than your normal business operation, outside of your normal business operation. So that would be separate. Is the worker usually engaged in independent trade, occupation, or business? Those separate, again, from your typical business operations. For example, the cleaning crew. So if you have someone that comes in and cleans your business once a week, and they're coming in and they have their own separate entity, then they are 1099 and that is allowed. But if you have someone that's coming in every single day, the law might look at this differently and seeing that this is a regular scope of operations. So this is something you might want to take up with your accountant and make sure that you have, or your agent, to make sure that you have everyone listed correctly. So how is your workers' comp rate calculated? In California, it's based on each $100 of payroll per class code. A class code is going to be for each specific type of employee. So you can have sales employees, people that are manning machine shops, people that are working at the front desk, salespeople, outside salespeople. You're going to have it broken down for each different type. I highly recommend, if you want to do a little research on your own, go to the wcirb.com/class search. And here you can type in the type of employee that you have. You could type in roofing. You could look up the different types. There's a few different types of class codes per 4-digit class code. So I highly recommend familiarizing yourself through their online portal. You can even call the Workers' Comp Information Bureau and they'll be able to answer any questions for you as well. Like I said before, any owners with 10% of greater ownership can be excluded from workers' comp. And if you have any changes of salary, let your broker or let the carrier know immediately. So if you insure for $100,000 in payroll, for total payroll for the calendar year, it's just like taxes. If you have less payroll, let's say you actually have 75 after all things are said and done, then you're only going to be charged on $75,000 worth of payroll. But conversely, if you have 125,000 in total payroll, then you're going to see an audit additional. And that amount, because it basically looks like you tried to short the carrier on how much you're paying monthly, you can see here, and then you're going to be charged more, and they don't break those payments down into installments. It's usually a lump sum. Experience mods are going to help determine exactly what you're charged. This is going to be dependent on number of claims. Everyone starts with a 1, and the carrier looks at actual losses that you incur versus the expected losses for an industry type, and that gives you an experience mod number. Claim frequency is weighted more heavily than claim severity. So if you have the same injury over and over again, and people are seeing, and the claims adjuster is seeing that you're not doing your due diligence as a business owner to have a safe workplace, then that's going to weigh more heavily than if you had one standoff claim and you quickly adjusted, sent them to get checked out to a clinic right away. That's going to bode well better for you as an owner. So the experience mod can help you or hurt you. As you can see here in this example, let's say your 100,000 workers' comp premium. If you have a low mod, 0.75 under a 1, you're going to get a 25% discount. If you have a 1, there's no discounts, no penalties. But if you have claims, the higher and higher this goes up, the more expensive. You'll see this person got an extra 30 grand tacked onto their policy just because of their claim history. Experience mods look like this. You'll have an workers' comp experience rating sheet for your business. And you'll see here what your mod is. Increases rates by anything over 1. You can also go up. I've seen upwards of 2.2 per mod before. Something to also consider is workers' comp fraud. Accounts for 25% of all insurance fraud, every single type, and it costs in the US over $7 billion each year. So here are some tips for reducing your risk of experience fraud. On Monday morning, I had a group who had the lowest mod I'd ever seen. It was a 0.65, and this was a large manufacturing company based in Anaheim. And I asked them, I said, what do you guys do? You have such a large staff, like work staff. What do you guys do to help keep your claims so low? And they said every Monday, to avoid weekend claims, they would have a quick meeting and do some light, gentle stretches, some yoga. And they would just check and see, was anyone limping? Was everyone not able to participate? And then they would be able to address those issues right away before the person went out into the workforce and then faked an injury to cover an injury that they got over the course of the weekend because they didn't have any medical insurance through the business. So these Monday morning moving meetings are very foolproof. Also, you can seek screening services, a pre-hiring service. These can be a little expensive, so just you can see a couple of different options. If you want to have some recommendations, please email me and I'd happy to send those over. And then work with carriers who only write workers' comp and have a good XMOD reduction program. So some carriers write all different types of policies. Like State Farm can do home, personal home, auto, but they also do some business insurance as well. I always recommend finding someone that specializes in your industry type or only does workers' comp, because they're going to be more incentivized to help you reduce any fraudulent claims or help you get your XMOD down. Workers' comp at the end of the year, you're going to have a year-end audit. Please don't ignore these. You'll have an in-person audit if your policy is large enough. And just like your taxes, we went over a little bit earlier, if your audit finds you overpaid, you had more payroll on the books than you really had, then you're going to get money back, and that will be a lump sum check. Or if you didn't report enough, then you're going to get that audit additional. So please, failure to respond, they will just go ahead and assume that you weren't in compliance, and typically tack on an extra 25 to 50% of the original policy premium. So these are super easy to avoid. When you get those letters, don't throw them away. Please do respond. Workers' comp in California, like I said, you'll only, just like any other type of policy, one quote is going to be released per federal tax ID for each carrier. You won't get different rates from the same carrier using a different broker. I highly recommend shopping this policy every single year. Put your broker to work. Ask to see the quotes back. You'll need currently valued loss runs for the last 5 years. This is the loss history report, which you can get from your broker or from the carrier direct if you don't want to tell your broker that you're shopping around. You'll also need to update your payroll figures and total employee count, part-time and full-time. And you'll typically want to start about 2 months in advance of your renewal date, because it does take a little bit of time. Things that can affect your rate: losses, if your experience mod goes up, how you manage claims. Are you doing your due diligence as an employer? Are you sending them to the urgent care when they get injured, or to the emergency room? Or are you keeping a safe program? Do you have a safety workbook? I highly recommend Googling, get a safety program for your business. Put your business name as a cover page, and at the bottom, at the back of it, when you have new employees, have them sign the safety program stating that they're familiar with the plan and how it works. So that will bode well for you as far as when you're and carriers looking at your business, how safe they think you're actually going to keep your business running. So we've kind of gone over a lot of different information here. I see some requests to be emailed. That's fine. I will follow up with people afterwards. Okay, we're going to keep moving on. So moving on to general liability, this type of coverage is going to help cover claims that's caused by your business that resulted in property damage or bodily injury from your products, services, or operations. It may also cover you if you're held liable for damages to your landlord's property. On average, we see about $1 million per occurrence with a $2 million aggregate. Sometimes you can see 2 million per occurrence with a $4 million aggregate. It depends on your landlord. If you have vendors or suppliers that require higher limits, but I typically would say on average, we usually see 1 million per occurrence. Property coverage, business personal property coverage here. I know there's a question about this. Business personal property can be required by a landlord. If you have your own place of business, you can insure your furniture, machinery. I say if you were to take your building and dump it upside down, all the stuff that would come out, computers, furniture, inventory, anything that would come out could be covered under your business personal property. Sometimes I see a question here. I was told by an underwriter that I need to add business personal property for a loan of $90,000. Why do I need additional coverage to qualify for the loan? This is very common. They want to make sure that if you are buying, let's say, a piece of equipment, that you have enough insurance to cover it if it is, if there's a major loss, if there's a fire or a flood and it's damaged, they want to make sure that you have the proper coverage in place. So that's common. Commercial auto. If you have vehicles specifically for business purposes, if you have heavy duty trucks, or if you again have specific vendors or suppliers that require that you have higher liability limits, if you have trucks that you're going to go out to a job site and use just for business purposes, you'll need a commercial auto policy. Typical limits can be anywhere from $500,000 to $1 million per occurrence. Hired and non-owned coverage, I highly recommend this. A hired car would be when you rent a car or lease for business purposes. If you're traveling to a trade show and you rent a car, you won't need to add the extra insurance on because you already have it through your commercial policy. And then non-owned auto would be, let's say you have an employee running a business errand for you. They're going to Staples, they're going to pick up lunch for your staff. They would be using their own vehicle for this and they get into an accident. This coverage here would apply and protect the business should you get sued. An umbrella policy is basically insurance on top of your insurance. So it adds an extra layer of liability protection. It goes on top of your general liability, your workers' comp, your commercial auto if you have it. We also have EPLI coverage, employment practices. This is going to generally cover claims in which the employee files against the business, because this can include wrongful termination, sexual harassment, discrimination, etc. Commercial professional liability or errors and omissions coverage. This would be if you are a service-based industry, you're an accountant, you do eyebrow tattooing, and you make an error. This could be where you would want to have this type of coverage in place, because if you make a mistake or omission in your professional business service, you could be held liable and be sued. I always recommend this for anyone who's in any type of consulting, real estate agents, graphic design, accounting, estheticians, marketing services. I do recommend looking into an E&O policy. We also have product liability, and I see this for a lot for people that work in manufacturing. It's going to protect the business in the event that your whatever you're manufacturing injures the end user. Consumers can be harmed by how the product was manufactured, if it was deemed defective, how it was designed, marketed, or if it was misused. So even if you have instructions that aren't clear, and then they're injured this way, you could potentially have product liability claim for that. This will cover liability for legal fees, settlements, court ordered judgments, or medical bills. It's great for companies that are manufacturing, distributors, people that are wholesaling, importing, and it's going to be based on the type of product that you're making. If you're making a food product that causes someone to be ill, or if you're making a component part that goes into an airplane, the airplane is going to be more expensive than the food product is typically. It's also based on your sales, your position in the supply chain. The manufacturer is going to be more expensive than the wholesaler is, the coverage limits that you are requiring, and then also your claim history. Some typical things that you're going to see in the event and your normal course of business would be a certificate of insurance. I'm going to pull one up for you really quick. So here you can see on the certificate, this is going to have your business name, the insurance company. Over here, it would have all of the different limits, the dates. So this would be, a lot of times you'll see these requests come through when you have a new supplier, vendor, a new bank loan. Some people will want to be named on the certificates, or they're going to want to just see a blank, basically proof of insurance here. This would have everything, every policy that you have related to your business. You can request these from your insurance agent or broker, and they'll be able to supply one for you. Certificates of insurance are free. They don't cost you anything additional. An additional insured is similar, but it is an additional expense. We typically see these requests from landlords, banks. If you have a loan with a bank, sometimes they'll want to be listed as an additional insured, and you want to be careful with additional insured requests because they basically will allow whomever is going to be the additional insured to have the same rights to your policy as you do. Let me go back to the presentation. Sorry about that. Additional insured. I always recommend if you get an email or some sort of like written request that has specific verbiage that they want to see on the certificate, send that to your broker or agent so that they can get it right and make sure that everything looks good. These are typically sent to the carrier for approval. Sometimes you may have carriers decline them. So these are something that need to be underwritten. Okay, so for cyber liability, this is a bigger conversation that's coming up in this day and age. It seems like everyone has cyber liability breaches these days. Target was one recently, airline. So you might want to ask yourself, in your normal business operations, are you collecting, storing, sending, or receiving personal information, private health information, dates of birth, credit card info, social security numbers? Do you work in an industry that has specific rules about how you protect that consumer information, whether it be healthcare, finance? And what would you do if you had a cyber attack today? How would you be able to respond? So a cyber liability policy is going to cover losses due to cyber attacks. If someone comes into your business and hacks in and then demands $50,000 to release all your files to you, that would cover under a cyber liability policy. It'll help with legal fees from state and federal regulations, notification expenses to alert affected consumers, and extortion paid to recover those locked files. We also have data breach. This is going to be a little different whether it's from like a hacker coming into your network or an employee accidentally leaving their laptop at a restaurant or a bar. I feel like we always hear about this with Apple iPhones. The latest iPhone was leaked because someone got drunk and left it behind, and now it's available all over the internet. But this would help notify affected consumers, patients, or employees, hire a public relations firm if need be, and then offer credit monitoring services to data breach victims. So we have covered all of our commercial insurance policy information. So I'm going to go back and answer any questions. You will be provided with all these slides, so you will get a copy. Why can't the cyber criminals be traced by payment method? I don't know the answer to that. I'm sorry, but I will. I know that they're, using the black market, crypto, things where it's not traceable. I need to rent a storage for the clothing inventory. I would need to insure it for a large amount, more than 300,000. What kind of coverage is available? That would be through business personal property. And what are the requirements and claims rules? Thank you. It's going to be different for each carrier and dependent on your business type. If you want to please email me, I'd be happy to go over that with you a little bit more. I got some specific requests to get emails for specific questions. I'm happy to do so. We will be sending a copy of the slides and the recording. As far as I got a note here from Jasper offering better quality staffers. You can pick and choose what you want to offer to your staff. I'm going to move forward here for the next slide for my personal information here. Allison M. at Maxwell Agency. My phone number here is as well, 949-229-8720. If you guys have any questions, please don't hesitate to reach out. I'd be happy to schedule some time to discuss your specific needs. I also have RJ on here who Richard.Carver at Icon Savings Plan, who can help you with anything relating to retirement plans. Neil Booth was our Medicare expert who was unavailable today. But if you do have Medicare related questions, please make note of his email here and don't hesitate to reach out to him as well. If you guys have specific questions about different insurance that a food truck business might need covered, please do email me. I'd be happy to go over the specifics. It is 1 o'clock. We are out of time. So if you have any specific questions, please don't hesitate to email me or call me today. All right, guys, thank you so much for your time. The recordings and the copy of the slides will go out to your email shortly. So thank you so much.